Hey everybody, I'm Spectacular, the Silver Stacular. I'm here with Lior Gans, who's over in Israel right now. He knows a lot when it comes to the precious metals markets, and he's really wise about some of the mining companies out there. And Lior, before we start talking about anything related to precious metals or metals in general, I just want to ask how you and your family are doing over in Israel.
I thought you were going to ask me about the pink headphones, but
I didn't want to mention. I didn't know if that was,
a touchy
taboo.
subject. Yeah, yeah. It's my daughter's, but they're so comfy that I'm like they're good on the ears for for a 4 hour interview. Me and my
Great.
family were sorry.
They look great on you.
Yeah, um, yeah. Me and my family were personally Tel Aviv is like the home front, so uh, we don't see the impact of clashes here. But in the first 2 weeks of the war, so between the 7th of October and the 21st, um, the Hamas terrorist organization and the Islamic Jihad organization did fire rockets at the home front. So the Iron Dome system did intercept them, and I live in on a higher floor, so you can actually see them intercepting in the air. But there are sirens, and then you need to go to the shelter in the apartment and just stay there until the danger is gone. And in the first 2 weeks of the war, the kids did sleep in the shelter. It was just easier instead of trying to, you know, move them back and forth in the nighttime. Um, but now it's different. And I do think that it's important for people in America to understand that this is not uh, this is not an operation. This will take time. We are reshaping the entire framework of our secured borders as a country. We're making sure that the threats from all sides are diminished, and this will not end soon. This will be a multi-year process.
Well, we're just glad to hear that, you're okay and things are looking up. I know it's going to be a long process. I mean, that's how conflict goes. I mean, we've seen it, all the time over here, how it's not something where we just go in and out. It's a long
Correct.
time. But we'll keep thinking about you and hopefully you can keep talking to us and we can hear back for how things are going and we appreciate that little, update for sure. As far as metals are concerned, let's talk about that for a moment because
Sure.
gold has teetered around the $2,000 mark, came back down, and people were like, "Oh, there it goes, it's gone." But now
Uh-huh.
here back up again. And
Hmm.
what's kind of going on in the metals market? Silver is even doing decent. It's not like any kind of high or anything like that, but it's been teetering up too these last few days. So what's going on there?
Yeah. What's happening is after uh, nearly 2 years now of financial tightening. So the first Fed rate hike was January 2022. So you're talking almost 2 years now that we've been in this tightening cycle, and uh, it really got real tight. Interest rates went up. The 10-year went up over 5% just recently. Mortgages for 30-year 8%, and this is not a normal economy. I can tell you that from um, uh, calling fund managers that I invest with in the real estate side. They tell me, like, you can't do a deal. There's no funding. There's no lending. The seller thinks that I'm going to go bankrupt tomorrow, and uh, I'm sorry, the buyer thinks that I'm going to go bankrupt tomorrow. So he puts the bid 15% below automatically, and I'm doing well because rents are fine in America, so I don't need to sell. But on the flip side, the banks want to refinance me at very high levels, so it's a very tricky game, almost impossible, and it tells you it's unsustainable. But the Fed had to take drastic measures because one, they were late on understanding the full picture of the inflation side in the back half of 2020, and then it got real bad in 2021. The first half, it was borderline hyperinflation with CPI at 9.2%. That's insane for America. But now that they've got CPI pretty much under control, the second part throughout 2023 was the tight labor sector. Too many people, too many companies looking for qualified employees, too few employees. And now that also seems to be coming into balance. So now the two main concerns that kept rates artificially too high, because they're now too high, have mostly dissolved. So now you can slowly start to bring rates back to normal. And when I say normal, I mean about 4.5% probably to 4.25 by the end of 2024. So we're not talking about drastically cutting rates. We're talking about losing 1 percentage point, maybe in 2025 another percentage point, and then by 2026 you're at 3% on the Fed funds rate, and that should put a cap on inflation and keep it at 2%, or thereabouts. So we are in a multi-year process for this. It's going to keep eroding the purchasing power of the dollar in the meantime, and certainly the fact that you can now start talking about rate cuts and start to price them in is a huge positive for gold and for silver, because when you have these shifts from especially tight to easing, those are the best times for gold and silver. The recent times that I can give you are 2009 to 2011. That's when you go from especially tight to especially easy. Gold went from 850 an ounce to 1900. Silver went from 9 to 49. 2015, late 2015, and into August of 2016, with Brexit, that was a huge easing moment. For 8 months, gold went up 30%. I think silver went up about 50. 2018, right around the time that Powell started to talk about rate hikes on autopilot. You remember those times? And then we had a December bloodbath in the markets. It went down 20%. 2019, he did the monetary U-turn. Plus, we had Basel III. So you go into the cycle where now gold is a tier 1 asset. That was a great year for gold. Easing again after the tariffs, 2018, easing. Gold went up and up until the pandemic, and then it crashed, and then things got real easy after the Fed said that they would buy any junk bond that they needed to in order to stabilize the economy. Gold rallied to all-time highs, to all-time highs. So I think that every time it eases a lot, it's great for gold and silver, and I think we are entering that period where it's going to ease. So it's really good for gold and silver.
Do you think that people have lost trust in the banking system too? Because you see these banks that are failing. The process of the rates on like getting like a new home. It is what it is. I mean, that's where we are at this very moment. But just beyond the rates, trying to get a loan from the bank is difficult for a lot of people. A lot of young people have to put giant down payments, and not only the down payment, but these banks want like to see that you can pay like your first 6 months in a house, and they want to see that money in the bank just sitting there. I mean, is that scaring a lot of people to where they might be like, hey, we gotta look into something else besides just cash right now?
So right now there is a bubble in money market accounts. Everybody is in money market accounts. All the retail public is just going in there, getting their 5%, and money market accounts have close to $7 trillion in them. That money is, when it's in a money market account, it's not in your checking account. So it's literally outside of the banking system. So if you think about why banks can't lend, it's because they don't have capital. When that capital flows back into the banking system, then that will really help to lubricate, the economy, mortgages, etc. So I think that it's a double-edged sword that the public has gone largely into money market accounts. Institutional money is starting to come back from money market accounts back into equities, the banking system, etc. Retail, not yet. So I think that what the retail public really wants to see is that we don't have a recession next year. And as the Fed starts to ease, and I think the first cut will come in May, I think that the public will start leaving the money market accounts, which will yield now less than 5% as you cut rates, back into the banking system. And that will help with the real estate market, and then they'll come back. I don't think that people have lost trust in the banking system, and they shouldn't. There are 4,000 banks in America, 4,000. All of them go through rigorous tests. You did have a bunch of failures, but the FDIC insured everyone. That really helped. If you look at countries like Russia, where people don't trust the banking system, and you can see what happened there. They had to go through capital controls, loan restrictions, like things that in America, if you just hint that you're gonna do that, there'll be a march on Washington with 1 million people. So luckily we're not there, and it's certainly nobody should be afraid of the banking system. It's not realistic. Now, as the Fed continues to shrink its balance sheet, we will see interest rates remaining high. That's something people need to understand. The days of getting a 30-year mortgage with a 3% fixed, it's gone. That generation of people that bought homes, those were people that capitalized on that opportunity. But I think that you need to think about rates that are normal, 5.5%, 6%. I think that's more normal.
With this channel, being the type of group that I have that watches, a lot of them are afraid of the banks. They don't really trust them, and that's just the way their mind is. Try to convince them otherwise. It's difficult, but they're set in their ways for whatever reason, and that's why they tend to go to like the silver and gold and stack it physically, just because they're not really trusting of somebody else holding onto their money. Although
I agree,
is like it's a thing that we have to use. I mean, it's a necessary evil, so to speak, for these people.
So, for me, with my grandfather coming to Israel after the Holocaust, trust issues. Believe me, it's ingrained. But it's important to separate paranoia from decision making, and so I don't think you should choose between them. Both are fine. Look, if the banking system collapses, it's not something you wake up tomorrow and it happens. It's for the banking system of America to collapse. It's it didn't collapse in the Great Financial Crisis. So just put that in perspective. That's a great case study. That was the greatest bubble in history for real estate, and still we're here today at nearly all-time highs for gold, nearly all-time highs for the stock market. America's GDP is, I think, doubled since then, et cetera, et cetera. So the world has a tendency not to end. But meanwhile, there is no reason why you should not own gold, because gold doesn't just work at the end of the world. It works in general. If you look at 1971 till today, gold has gone from 35 to 2,000 in dollar terms. In other currencies, it's done way better. In any other country in the world, if you bought gold in 1971, you've made over 100 times to 200 times, maybe 300 times your money. Not a measly 60 times in America. So keep that in mind. In the 21st century, gold has gone from 250 to 2,000, so that's 800%, and silver has gone from about 4 to 24, 600%. So I think that, if you look at it in general, it makes sense no matter what. But it's important to understand what are precious metals, or what is physical precious metal. Where should it come in? Should it be instead of something else, or should it just accompany and be an added addition? To me, precious metals, I look at them in this regard. I take my monthly family burn rate, whatever we spend on a given month as a family unit, just to give you like in theory, let's say it's $5,000, everything, rents, this, 5,000. You take 24 months, that's $120,000, and you put 80% in gold, 20% in silver. I think that's enough for any person to last a 2-year depression in his current living expenses. So to me, that's always been the way I look at it. Do I have 2 years worth of my living expenses in physical precious metals? And when I thought that wasn't enough, I upped it to 5% of my net worth, and that's it. I don't think that doing more than that serves you in anything, because those are not productive assets. They don't generate an income. You're not selling them anyways, right? They're there to be savings. So while it's nice to look at them, they don't make you richer, because you can't exit them. They are a savings vehicle. So if you're my age or your age and you're trying to build wealth, you want to be involved in assets that generate an income and a return, and you can exit them. So that's more been my strategy all along. And with regards to the banking system, look, America's banking system isn't going anywhere. It's the most liquid, safe, and beautiful banking system anywhere in the world.
Well, that mindset of gold not being only for the end of the world, I've preached that since the beginning of my channel. I don't believe that it's just like a apocalyptic scenario where you need the gold, and I don't believe it's going to be really important immediately once there's such a sickness. Anyways, but you look at any kind of country throughout America, beyond the United States, the world's history, and they've collected gold from the beginning of their country all the way through, right? America, that was, getting gold immediately was so important, and that was the beginning of our country. So why would people think it's only going to be important at the end? But with some of these shifts in gold and how things are working, what can that do for some of these mining stocks that are out there actually finding and getting this gold out of the ground? What can that do for those companies?
Yeah. So I personally think we are about to see a surge for the mining sector, like a real boom in the economy. The fundamentals are there for the first time in many years. What we saw in 2011 do you remember the pigs country, Portugal, Greece, Ireland, Italy, and Spain all go, these European countries that have been around for ages, they're going to go bankrupt. And the Euro crisis in 2011, it brought a realization that no matter how much QE you put in the system, there are huge deflationary forces in the economy. But those are over. So the deflationary era of 2011 till 2021, 2022, which gave us the FANGs and all these deflationary assets, tech assets or growth assets. These are deflationary type assets. They flourish in a deflationary environment. That's over. And you've entered an inflationary era. Inflationary era, what works better are actually not global companies or multinationals, but the domestic companies, small cap companies, companies that serve America, that reside in America and serve America, banks, countries like Japan, the European Union can flourish in this new environment, in an inflationary environment, and infrastructure companies and mining companies. Those can really flourish in the environment that we're entering, which is an environment of higher than normal inflation, normalized rates, and um, and all that money that went into tech growth is pulling away, and just that money coming back to normal is enough to spark a fire in the mining sector. So I'm extremely bullish about mining for 2024. Extremely. I can tell you, let's look at the next Fed meeting, FOMC. Let's make sure that they say the right things about the economy, that they fully understand what's happening. And if they do, I think that come January, you will see a rotation into the mining sector. I don't know if it's going to last a year or 2 years, but I can tell you, I've been involved in the 2010, 2011 mining boom, and in the 2016 breakout from January till August, and I was involved in the 2021 that was short and to the point. And when you have those and you do what you need to do, basically you generate returns that take years in a few months. So I am extremely bullish. And actually, just a couple of days ago, I authored a report detailing the whole thing. If you want to learn more about it, like at Wealth, at our at wealthresearchgroup.com/boom, like BOOM, that you can download. You can read that report. It takes you 10 minutes. You understand truly why 2024 can be an incredible year for the mining sector, and I believe it will be.
Lior, if that's okay with you, I'll put that link down in the description of the video so people can just click on it and just have access to it. Also, maybe you know something about this. I've noticed, out of my side eye, that uranium seems really, really interesting right now. And apparently, from what I've been reading, that there's some sort of shortage going on. So, before I let you go, do you have any insight on that?
Sure, yeah. In the past 3 years, and certainly since Russia stopped being the petrol station for the world, when you look at the ESG agendas of the West, where they need clean energy, but solar and wind don't suffice, and you see all the turmoil in the Middle East in terms of supplying of oil, you need a transitionary energy, and the one that's both clean, cheap, reliable, and has seen as of late great technological advancements in extraction capacity, and also in what's called SMRs, which are small modular reactors, that are reactors the size of a petrol station that you can build outside of a hospital or a server farm, and they can supply your particular institution with reliable baseload energy. All of those have created the case for uranium. Now, uranium is a very interesting energy metal because the United States produces very little of it. There's only one mine currently in production in New Mexico, and it produces such a negligible amount that the United States imports everything else. It imports a lot from Canada, from Nigeria, from Kazakhstan mostly, and even from Russia. Obviously, the Russia imports are on the decline and probably will cease by 2027. So that takes a lot of the supply out, with Russia being about 15% of all uranium imports. So you need new uranium mines in America or to increase them in allied countries like Canada. But the cost to operate a uranium mine is about $60 to $70 a pound. And for many years after Fukushima, the price of uranium was even as low as 18 a pound. So most mines were on idle, what we call care and maintenance, and they were just trying to minimize any expenses, just keep them ready. And at the prices we have today, there is a real boom in the industry, but it takes time to bring these idle mines back and to build new mines. So you have a situation where demand is exceeding supply by about 60 million pounds a year. The world consumes around 190 million pounds, and it produces 130. So there's a 60 million pound shortage, and it's only growing. You offset that by dismantling nuclear weapons and taking the uranium from there and processing it to become usable for energy and heat. But that program is largely ended. That was a Soviet era, post-Soviet era program that Clinton signed with Yeltsin back at the time, and it ended. And now with European countries and with Japan and with China and other countries building new reactors, you need mines, you need uranium supply, and it's not there. 20% of American households depend on uranium for heating and energy and electricity. It's a big chunk of American public that relies on this. So with all of that, uranium companies are doing amazingly well. In fact, one company that we've featured over the years, as even as low as $1 a share, is trading for over $6 a share right now, and at an all-time high. It's a New York Stock Exchange company. It's one of the biggest uranium companies in the world. So just to say, this is an industry that's booming, and I think that it has more to go. If you want to listen to one of the to the smartest businessman to ever live, Elon Musk, he believes that uranium is a must in America. So there's a lot of things going for it. It's classified as ESG friendly, so it's clean. It's much safer than before, and so yeah, I do think that the uranium companies and the uranium industry in general, it's a very interesting industry. If I was just fresh out of college, that would be something that would interest me to join the uranium industry in America. If I was just starting out with no real sense and no real direction, that is an industry that's going to boom.
It's very exciting, and I think it's also interesting that a lot of people that watch my channel, obviously they're into silver and gold; those are the big ones. But there's always a mention about uranium in my viewers. They always that's another interest that they have, and I always find it fascinating that the silver and gold people are also uranium people. So that's why I started noticing it, and I seen the same company you were talking about. I was like, wow, they're doing really well right now, and that's when I started figuring out that there's a little bit of a deficit. Kind of interesting. See how that
Yeah,
goes.
it's a big deficit, and it's going to take a few years to solve. And keep in mind, all commodities, all resource sectors are boom and bust. So when it feels good, when you're seeing that it's easy to make money, then start thinking about your exit. This is not no commodity is a buy and hold forever in terms of an exit. These most commodities are very, very cyclical because the price of a commodity rises until it reaches an area where there's too much of it. There's a glut, and then the price starts to come down as the excess capacity needs to be sold at a discount, and then companies go bankrupt, and you start the bust cycle, and boom cycle and bust cycle.
Very good. Lior, if it's okay with you, if we could do this again here shortly, so we can talk more about, because things change rapidly. And if we could just, as things start to change a little bit, we can talk again so we can see how things are moving in the markets. That'd be great if you don't mind. I think you're a
I'm
wealth
not
of
going
knowledge.
anywhere.
Yeah, good, very good. And again, I'll have that link down in the description of the video. It's a wealth research group slash, what was it? Boom,
Boom.
boom. Leor, again, thank you
Not
very
that
much.
boom. The other boom.
The good kind of booms.
The goop. Yeah.
I greatly appreciate you, and I appreciate your pink headset. And you're welcome on any time. And hopefully we can do this again soon.
Thank you, sir.
Thank you. Bye.
Say when I get older, when I look like that. Like, that's not looking pretty good compared to what I could be looking like, or will be looking like.
Nandori il Hoshaya il nome bajo le yatra io sono core lare ya ti takore staya le ate pokore il rola da core.
Well, hello, everybody. I seek to educate and entertain through my journey of collecting coins and stacking precious metals. I encourage you to subscribe and please stay with me on this journey. I am Spegtacular, the Silver Stacular. When I was a kid, we did this every day in school, and I believe we need to bring this back a little bit, and I'm going to start right now. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all.